Hello, everyone. This is Demetris Curry. I'm here for what? The season finale of Financially Fit Fridays. Guys, I'm so glad that we've had an amazing season this year, second season of the Financially Fit Fridays. And so far this year, we've answered so many questions. First and foremost, I still want to say thank you for being here with us all this season. We have touched on so many points of financial literacy in this industry. And I wanted to take a moment and just say thank you for first and foremost for being with us, for always chiming in, giving great feedback, great questions, asking all the pertinent information that you need within your business and in your households, because it makes a difference on what's coming up next. Before we jump in with this particular guest today, let's look at how did we get here. We've had the ability to work with special guests and experts in their industry in an array of areas in financial literacy, starting off with estate planning, getting some information on legals. What does it look like to avoid probate? We started in that area, right? And then we also went into other areas such as commercial real estate as investors. What does it look like to prepare for that? What does it look like to actually do interest cancellation on those mortgages and the strategy behind that? We even had experts here in the area talking about what? Day trading, how to invest, where to start, hiccups, things that you need to avoid in your business and also in your personal investments. We touched on a few other areas like budgeting. Oh, goodness. How to get those budgets in place, where to start, how to be diligent and accountable to yourself in those budgets, and to also have a whole plan of action of what you're doing, right? And then we also talk to nonprofit funding specialists as well for those people that are in the sector of nonprofits and 501c3s and all of those things that they be working on. How do we make sure you are set and ready for grants, right? But along the way, as we've been talking about all these things, asset protections, life insurance, estate planning, retirement plans, all those things that we've worked on has brought us to today. It has brought us to having this pertinent conversation about one of the biggest things that hit us as business owners and as personal head of households, and that's our taxes. And so it has been an amazing run this season. And I've been working our way up to this very conversation. And I said, you know what? Who can we bring forth? I was really excited to have this conversation with none other with Miss Dr. Cozette White. Listen, you're talking about a wonderful, wonderful coach in this industry. She comes with an array of experience, seven-time best author, and have been featured on so many area and platforms like Fox television shows and Black Enterprise and Forbes. And when you're talking about having leadership, and when you're talking about having a lady that can come in and give you some real insight, I'm so ecstatic and grateful to have her here with us today because I knew this was going to be an important conversation. So before I go any further and give her too many flowers, I just got to bring her on. I got to bring her on. Dr. White, are you here with us today?
I am here. Hello. How are you? And how's everyone else out there? How are you guys doing? Make some
Oh,
noise for us.
yeah, look, do the hands, do the hands.
Right. Well, listen, let me just break out with my clapper here.
Break out with the clapper. I love it. I love it. Dr. White, thank you so much for being here with us
Yes.
today. We've been working up to this conversation over the months, and we knew that, with all the areas that we've touched on, even the mental mindset of getting ready to be a business owner, you got to also start preparing for those taxes.
Absolutely. Uncle Sam don't go away. He will not. He'll come knocking at the door real quick. So we must. It is a must. Even if we try to ignore it, you guys, it's a must.
It is a must. And so much to touch on today. So much to touch on today. But let me just start by saying your history and what you've been doing in this tax arena over the years is none other. And I want to say thank you so much for bringing your expertise, for being transparent, speaking about being a single mother years and years ago and how it all started. And
Yes.
I've had a chance to go in and dig deep on all of your, listening to some of your other webinars and seminars and some of your things you have out there. And I was like, whoa, she give me chill bumps just thinking about it, because me myself was, raised by a single mom. So I know
Right.
what that feels like. And but not only that, you've come in and just sort of like hit it really hard for those business owners and those tax preparers and telling them what they're doing wrong. So let me give you first your flowers and say
Thank
thank
you
you
so
so very
much.
much for what you do in this industry. We appreciate you.
Thank you. Appreciate that. I appreciate it. It's not easy, but it's important for us to just make sure that we guide our community, guide those in our community, because a lot of us are so misled. And so even to this day, we have people who are out there on social media providing incorrect information. And so if one is, I hate to say it, but if they're naive or uneducated, gullible, then they're going to jump on those negative opportunities. So I enjoy what I do, you all. I enjoy it. So thank you.
You're welcome. You're welcome. So let's chime on in. Let's chime on in. Let's talk about this thing that probably the first question that I get normally when I sit down with a family about, what they're getting ready to do in their retirement and how to sustain their wealth is tax preparation.
Hmm.
And how do they find a tax preparer versus a tax strategist? I mean, it's two different things, right?
It is two different things. And how I like to look at it, because I am an educator in this industry, is a preparer is preparing what took place last year. They're looking at last year's numbers and dumping them into a return and providing you with the output. A strategist is going to sit down and go through some real strategy.
Mhm.
Example, I have a client. I finished his return a couple of weeks ago. When I finished that return, I said, gosh, this gentleman is, about to retire. He's 61. And he texted me this week and said he was being laid off. Now, listen, you guys, laid off from a job on job for 36 years, okay? Laid off. But I had put a strategy together for him because he is a highly paid employee, but yet he has some rental property. So I had to go through this education session with him about, here's what we need to do considering you are at a pre-retirement age. These are the things that you need to do. And I talked to him, Demetris, about what if you sell, or what if you hold on to those properties, and just put some
Mhm.
strategy in place. Like, here's what's going to happen if you sell the property. Okay, here's what could happen if you hold on to the property and you pass it on to your heirs. Those are strategies, you all. Those are things that you should be doing to pre-plan in advance to prevent you from, number one, owing Uncle Sam, or paying him just too much and paying the system too much. So there's a difference. There's clearly a difference.
And isn't there a different, you know, requirement of leaving things like that behind to maybe a spouse or to the children?
There are different requirements. And I know you and I had this conversation, but just to the community, just really briefly, the reason why I really hone in on this and sit down with my clients is because if you own a piece of property, it's rental property. Right now, you're probably taking, it's not a probably, but you're using depreciation. And there's something called depreciation recapture. There's also called something step up in basis. So write those two items down.
Mm-hmm.
Recapture depreciation is, once you sell that home, you have to pay back, so to speak, and I'm going to use those words, pay back the Internal Revenue Service, the depreciation that you were able to take advantage of in the pre years. So if you held a home for 20 years, a rental property, investment property, each year you should be carrying depreciation. But guess what? When you go to sell it, it's going to impact that capital gain or loss. It's going to have an impact on your tax liability. what you owe the Internal Revenue Service. That's
Mm.
depreciation recapture. On the flip side, if you hold off and you pass it on to your heirs, say whatever the fair market value is at the time of death, and your heirs take over, they don't have to pay back that depreciation. They take over the property at the fair market value on the day of death. So if it's $1 million when you pass away, that's what they start at. If they decide to sell it 2 days later, 2 years later, they're only paying taxes on the amount that either if it had a gain in that short period of time or if it had a loss. So, strategy,
Yes.
strategy.
And it's like you gotta know the playbook, right?
Yes, you
It's a
really do.
playbook to all of this, just like when you're, in sports and things like that, and you have football and track and things like there's a playbook to what the rules and regulations and the fine lines in between the roadmap of
Exactly.
where to go. And that's where we get messed up at because
Right.
it's not our arena. It's not what we do on a full-time basis, right? And that's why you
Right.
have to have partners like yourself that say, hey, hold up.
Right, right. And another thing on that same subject, I just said listening to those that are on the internet, and while we're on this subject, like we hear so many people say, set up a trust, put everything in a trust, let it pass through. Do you realize how many people get screwed over by putting properties in a trust and maybe it should not be parked there? So educate yourself, have
Yes.
advisors, talk to individuals who are going to steer you in the right direction and not the wrong direction. So,
Exactly, exactly. And that's it's so important. And that's one of the questions that we got so much because we provide the revocable living trust ourselves with our team of advisors and our attorneys. But
mhm,
we make sure that when we having these conversations, you're rolling it properly, that it's supposed to
yes,
be properly done. Or you
right,
can really put yourself in a bad situation. You know what I mean? So
yes,
stick to the experts that know what they're doing and the people that have the credentials to get it done.
right,
Because it will come back to bite you truly. And I'm glad you mentioned that too, because that's
yeah,
that's confirmation. That is truly
yes,
confirmation.
yes. And
Yes,
I think to the audience, you ask strategy versus tax preparer. I think that's important for our listening audience. It's great to have a preparer, but you want someone who's really going to dive in and assess things, like take a deep, deep, deep dive, not just look at it at surface level and be able to provide you what you need to be doing 3 years ahead of, 3 years. That's planning, you all. That's asking questions. Do you plan on buying more investment property? Are you
yeah,
going to get a raise? Are you guys going to be buying? There's questions that should be asked so that in that planning phase, that strategy, tax
yeah,
planning, you
yeah.
can avoid some of the things that occur.
So what I've noticed is, and to dig deeper on this, what I've noticed is that some of the preparers don't actually specialize in strategy.
Mhm.
And so, when you're working with business owners that's trying to get ahead of, let's say they had a bad 2024, 2025, 2026, and they've had to pay taxes every single year, right?
Mhm.
But
Mhm.
they're looking for better ways to put themselves in a position, maybe in investments, maybe
Mhm.
in rolling things, pre-tax in such a way, maybe, collecting their pay on their social security in a certain way. So many different ways that they can do this, but they have to make sure they have the right type of person with them to do this. The strategy part of it, you have to specifically look for a person that specializes in that, right?
You should, because keep in mind, you all, I train tax professionals. And so some of our professionals are just one track, they're just taxes. And then you have those individuals who are just, they're analytical. They're going to think outside the box. They're thinking strategy all the time. When I'm doing a return, I'm not just doing the return. I'm assessing it once the numbers are actually in there. What can they do differently? Now, I just heard you say there's individuals, and we know that, year over year over year. And a lot of times, you all, clients are like, She's not doing anything for me. I owe year over year. Sometimes it's not that we can do anything, it's your situation. And sometimes it's not even about a strategy or something different. A lot of times, and I'm talking to my W 2 wage earners, if you're a W 2 wage earner and you don't have enough coming out year over year, you're going to owe. And until you decide, I need to have more money coming out of this paycheck, more than what they're taking out, then I'm a continuously owe. And we run across those situations, and it's not necessarily the preparer, it's the
Mm-hmm.
taxpayer. But when we do have those situations where we provide advice and then you don't take the advice, and then you come back to me next year and I'm telling you the same story that I've told you for a couple of years, then I sit down and I have a come to Jesus conversation. Like, I don't let it linger on, because what I feel is though that's my reputation. You're going to go tell the next person, I've been going to this lady for 5 years and I owe year after year and she hasn't done anything differently. Well, there's two sides to a story.
Right, right, right. And it could be that the way your stuff is set up, that
Right,
you're earning so much more money and
right,
you don't have the things to write off
right.
to
And so I'm giving you
balance
the
you out.
strategy. I've given you the strategy, but you
Right.
haven't executed. And in those situations, to all our taxpayers, it's either you're going to take more out, have more withholdings come out, federal and state, or you're going to set it aside and know that you're going to pay. So you
Mhm.
decide, do you want to pay the government in advance and allow them to use your money to gain interest? Or do you set it aside? If you're disciplined, you can set it aside and
Mm,
allow yourself to grow a little bit of interest. But if not, just pay IRS up front.
right,
Just pay them.
right. Let's talk to our self-employed people. Our self-employed entrepreneurs, we have a usually a big following of people that love to ask those questions about, what if I'm self-employed? What if I'm trying to build a retirement from being self-employed? The best ways to do it, you have the self-employed, the IRAs, SEP IRAs, you have the traditional IRAs, you have the Roths, you have all these things that you can get into, but you want to maximize how that
Mm-hmm.
looks, as far as putting money away, being able to get to it later, maybe pre-tax versus non-tax with the Roth. Tell me this. From what you've seen in entrepreneurship, the best routes to go tax wise in putting funds away in your retirements.
So there's a lot of different ways you can structure it. But if you're looking to save for retirement as well as have a tax deduction, you could do, of course, the solo 401k. All right. We all know solo means that's just you. 401k, that means you cut a paycheck every pay period, bi-weekly, bi-monthly, however you cut that paycheck, and you're taking money out. Okay, you're contributing to your 401k. If you are the single solo owner of that company, then you can match. Okay, you can match up to a certain dollar amount. We know that that amount changes per year. It also, depending on how old you are, if you're over 50, you could do a catch up. But why not contribute pre tax to the 401k, have the company match, which is your company, and you're able to write it off. So you're saving for retirement and you're reducing your tax liability. So let's just say, I don't know, you give 12,000 a year, the company matches 12,000. That's 24,000 put away to your retirement. Okay?
Mhm.
And you writing off 12K of it because you're the employer of your company. Okay? So that's one solo 401k. You have SEP. Now you got to remember with SEP, it's a cap. You got to also remember, if you have employees, then it has to be equal across the board. You got to remember that. Even with 401k, you can have a 401k, but it's not a solo 401k. But then there's guidelines and whatnot that goes into effect, meaning you can't be paying yourself more than you pay your employees. And
Mhm.
with a 401k, you guys, there's a tax return that must be done, and it's called a 5500.
Mm.
Most people don't realize that. But the administrator of your 401k will usually take care of the 5500 on your behalf.
Gotcha.
And all it's doing is making sure that there's no individuals that are being that are contributing more. The high wage earners,
Yeah.
they're not contributing more than the individuals that are not making as much. Okay, so that's 401k. You got your SEP. You could do a Roth IRA or a IRA. You can
Mhm.
contribute. So there's a lot of different ways that you can maximize your retirement.
Mhm.
There's other avenues, but for tax purposes, that's pretty much what I'm gonna teach you guys
Yeah.
about retirement. I don't really get into mutual funds or anything because that's not my lane, but I will tell you about what's going to help you to save on the tax end.
Right, right. And that's confirmation, because that's one of the things that when we talking about that, it's like, hey, where's your thinking? Where's your thoughts process on this?
Hmm.
What do you want this to do for you? Because all of that comes up in those conversations. You know, we're working with clients that have been asking about these RS letters. Ooh, girl, listen, listen. I said, not my lane.
All I'm going to say is open the mail. That's the first thing. Like, open the mail, you guys. That is, and it's not even just open the mail. Like, stop throwing it to the side.
Ooh.
But I can tell you that just humans get so afraid of opening a piece of mail from any state agency and the Internal Revenue Service. I just before this interview, someone texted me and said another letter from the IRS is coming because they can see when the mail is coming, and I'm afraid. And open the mail. Like, that is the hardest thing to get taxpayers to do. And when you let the mail sit and not open it, by the time you've gotten that certified letter, you guys, you know that it is serious. The IRS will work with you. They're patient. But after so many attempts and you continue to ignore them, then they're going to raise the bar and say, well, we've tried to get his or her attention. They're not paying us any attention. So let's take it to the next level. We've sent 3 letters. Okay, let's escalate this. So open the mail, respond, and guys, even if you can't afford or you think you can't afford, making a phone call and being proactive is much better than ignoring.
Mm-hmm.
There's so many different programs that we can put you in if you owe the Internal Revenue Service. There's a lot of different programs. We can put you on non-collectible. We could do a payment installment. We could do a partial installment. We can even do an OIC, offer and compromise. But when we do an offer and compromise, those are hard to get approved. So you have to come with a backup to support. You have to have compelling reasons why things occurred.
Mm-hmm.
And I like to tell everybody, I use it just like this. When the IRS makes an offer to you, it's like you're on probation. They're going
Mm-hmm.
to watch you for 7 years. The minute you default, guess what? They're going to throw what they originally made the offer. If you owed 700,000, they settled for 100. If you default, guess what? They could throw that back over the fence.
Wow.
But if you ever get in that situation, you are to remain in compliance. And
Mm-hmm.
the minute you fall out of compliance, it's just like someone that's on probation. You violated your probation, and here are the consequences that go
And
along
here
with
the consequence. It's just like you listen. Don't get on probation.
it. Right,
Don't get on
right.
probation. And so you have the process of you getting a letter in the mail,
Hmm.
opening the mail. The first 48 hours, your first step is what?
Well, the first 48 hours, y'all, is to open the doggone piece of mail. Once you open the piece, I'm serious, like open the mail. Like stop letting, I can't say that no more. You will be surprised. People will say, well,
No,
I got 4 letters over there. I haven't opened one. I'm like, okay, well,
you, you must be seeing a lot in that way.
it happens. By the time they come to us for resolution,
Yeah.
they've ignored all, they've ignored it.
Yes, yes. I'm
But
like,
what I need you guys to do seriously, once you've opened the mail, then take action.
yeah,
Read through it. If you are uncertain about what it is that you're reading, call the person who's assisting you, your tax preparer.
yeah.
That's what you should do. Allow us to come in and step in and take over. If your preparer cannot assist you, then that's when you need to ask them for a referral,
Okay.
or you need to start seeking an enrolled agent or someone that can assist you.
Right.
Okay.
That's the direction I was thinking. It's like, hey, as
Mm-hmm.
soon as you get that letter, if you're reading it and it seems foreign to you, you don't know what they're talking about, this section, that section, to reach out to the person that help you with your tax
Reach
preparation.
out.
Yeah. And if they don't know what how to help or what to do, then you have to reach out to someone that can help.
Right. And the one thing that I say to any and everybody, taxpayers, if you are not, if this isn't your lane, which most taxpayers is not, don't try to take on the situation yourself. A lot of times when you hire us as an enrolled agent or our office, we can get you out of a situation versus you having contact with the Internal Revenue Service, because they're going to trip you up. My brother-in-law, every time he calls the Internal Revenue Service, he says something that he should not. I'm like, why didn't you just call me? Well, I didn't want to bother you. Okay, now you see what you got yourself into. But
Yeah.
pass the letter on and you be proactive. I will say this on behalf of all of my colleagues. When we have a lot of clients calling us, just be a little proactive. Call, nudge us, but make sure that they are doing what they're supposed to do to get the job done. Okay?
Gotcha, gotcha. You mentioned earlier that there are ways for once you have been contacted by maybe someone that has that letter, and there's different options that they can help sort of get everything settled. You mentioned a few different options there of how you can help with that. Can you break that down just a little bit for me?
Absolutely. So the Internal Revenue Service only has 10 years to collect once they've assessed. If they assess as of today, which is the 17th of July 2026, they have 10 years to collect. However, if at some point during this 10 years they put you on non collectible, then the clock stops. So I try to tell people just let the clock run out. Okay. So they have 10 years. So you have current non collectible. And what that actually means is the taxpayer is not in a predicament to pay the Internal Revenue Service. So they'll put a temporary hold on all collection activity. They'll
Mm,
reopen it up. They usually check about every 2 years to determine what's the financial situation. After 2 years, if your financial situation looks better, then they'll open it up. That's number one. Then we have a partial pay. Say you owe $200,000, but for some reason you can't pay that full $200,000. We can negotiate on behalf of our client to submit what we call a partial installment.
mhm.
Okay, a partial pay. You're not going to pay the full amount, but there needs to be compelling reasons. We need to make sure that the client is current with all taxes. If they're self-employed, and
Mhm.
this is really important to all my self-employed individuals, you must be current on your estimated taxes, and you must also make sure that your taxes are current before we can go in and negotiate. We cannot do any negotiating for you if your current year's taxes, your estimated taxes, like if I'm negotiating on you for you,
Mhm.
they're gonna come back and say XYZ needs to pay $11,516 before we can look at his plan. And
Okay.
it happens every day. That's what happened yesterday. Okay. You must be current with your estimated taxes, and you must have filed and current with, up through the current year. Otherwise, I can't do any negotiating for you.
Mm,
Okay. I can do an offer, but once that revenue officer looks at it, And she says, Mr. Smith, in order for us to even look at this, approve this, he must have this estimated taxes for 2026 paid. Otherwise, we're going to deny the offer. Okay. So offering partial pay, CNC, just a payment plan.
Yeah.
You know, sometimes people just need a payment plan, and we can make a payment plan up to a certain amount. And then the offer and compromise. I think I covered them all. And then we have abatements, penalty abatements.
Okay.
All penalty abatements are not automatically approved. We must have a compelling reason as to why we are requesting it. All right. For some of you business owners, this happens quite frequently. You convert to an S Corp. Someone doesn't tell you. If you are late filing that S Corporation return, which is due March 15th, then the shareholders, if it's one, if it's two, will be assessed a penalty every single month. Every single month up to 12 months. Okay.
That's huge. That's huge right there.
That is huge. It's I think it's like $2,900. Had a situation this tax year. The wife wanted to go on the return as a shareholder. I kept saying, are you sure you want to do it? You sure you want to do it? This return is late. You sure you want to put yourself on here? I don't think it's in your, but yeah, I need to be on. Okay. So weeks later, about a month later, she got a notice and said they owed $5,000 and some change. I kept asking you. So these are the things like know the rules and make sure whoever is preparing your return is informing you and advising you. Like I kept saying, I don't think you should go. I don't think you should. You sure you want to go? All right, it's your return, but I'm telling you what's going to happen. You know, it's late, right? You know you're going to get a penalty. And she heard me, but she didn't hear me. She heard me when she saw that letter.
She heard you real loud when she got the letter.
Well, where I was going with that is, you all, in her particular situation, I'm doing a penalty abatement. Okay. You got to know the rules. You got to know when you can step in and when you cannot step in. In her case, I can do a first-time penalty abatement, and I know what to tell the Internal Revenue Service to get that approved. But that may not be the case with every taxpayer. You got to know when to play your cards. When you going to play your cards? Do I play it right now or do I not play it? So in her case, I'm going to go ahead and play the cards because it's $5,900. And So abatement, offer and compromise, also known as OIC, partial pay, payment installment, and currently non-collectible. We call that CNC.
You didn't drop out 12 nuggets right there in that one. Because what I also
again, like everybody thinks that not everybody, but there are some taxpayers who feel like they can call the Internal Revenue Service and negotiate on their own. The person on the other end knows that you are a taxpayer, not an enrolled agent, not an attorney, not a CPA. So they're going to not tell you what they should be telling because you don't know what to ask. You don't know how to negotiate.
So that brings even the question of who you choosing to negotiate for you.
That's really important.
Yeah, even if your tax preparer helped you with this filing and you're going to them first and they're like, okay, yeah, we'll just make arrangements with the IRS, but they're not really in a position sometimes to negotiate for you.
So this is to all of us. We're all taxpayers. Who can represent you before the Internal Revenue Service? Your tax professional can represent you for the current year. And that's just for minor things.
Oh, gotcha. Okay.
But if you have a situation such as back taxes, maybe the Internal Revenue Service has gone ahead and filed a return on your behalf. Maybe you need to negotiate payroll taxes, not income, but payroll taxes. A tax preparer cannot represent you. Okay. There are some ways to get around some things, but technically a tax preparer cannot. An enrolled agent can represent you, a CPA can represent you, and a tax attorney can represent you before the Internal Revenue Service. But a tax preparer is not licensed to represent clients in all 50 states before the Internal Revenue Service.
That makes sense.
That's critical. They
Yes.
cannot negotiate on your behalf, even if they have a power of attorney on hand. And right now it's so tough to get a POA if you're not a enrolled agent, CPA, or tax attorney. So we have to put a POA on file with the IRS saying we can represent our client. We can represent, we can settle on dollar. We can represent if the taxpayer allows us to do that.
That's good stuff right there. You mentioned your brother.
Yes.
And listen, when people, especially when feel like, oh, I'm just gonna call and do it myself, that kind of thing. I don't want to bother them with it, that kind of thing. The words to say and what not to say can hurt you.
Oh, for real. Yes. That's the moment you say anything to the Internal Revenue Service, it is going to be held against you. Okay. Remember, the very first thing what happens when you call, this call is being recorded for training purposes. Training purposes. Okay. The call is being recorded, and the Internal Revenue Service can and has done and will go and pull recordings, whether it's face to face or recordings. If a revenue officer, we call them ROs, if a revenue officer shows up to your house, it's probably best not to talk to them. It is best not to talk to them. Just say yes, okay, that's it. Don't answer any questions. And I say this to individuals all the time. You would be in trouble if the IRS came to your house because they asked you a question, but you told them a story. Yes, no, yes, no. You don't need to guess, but no. It's a yes or no. Don't go into a story.
Wow. Girl, listen. This is a conversation to be had.
It is. It is. And, I mean, if the revenue officer shows up at your house, it's probably because you have ignored the letters and they've made several attempts to contact you and you just ignored them. Yes. Right. And they do show up to your homes. To those of you that are listening, they do. And they have to show a card, and they do.
Wow. So the best form of defense really is to open the freaking letters.
Open the mail and take action. Open the mail and take action. And to all of us, if a revenue officer shows up to your home, or even if your case or your files, your tax years have been transferred over to an RO, that means that the problem has elevated to the next level. It's no longer at the call center, it's elevated.
Wow. That's powerful. That's powerful. Thank you for sharing that, because I know there's so many that, have the same question of what to do, what direction to go, what should I say and not say. Not that you're not trying to be transparent, but you just don't want them to take something and run with it, right? And make it something other than what you meant. So it's better to have someone that knows the verbiage and knows the lingo of how to explain things in such a way. That's powerful.
And as painful as it may be, we as taxpayers, we should just go ahead and invest in getting a professional who's going to get you out of the situation that you're in.
See, I know I just called Dr. White. I'll call Dr. White, say, hey, mama.
Right. And here's a lot of you have multiple businesses.
Yeah.
And if we have to dive in, we're not just going to look at one business. We have to look at all of the businesses, because the money can be interrelated, or we have to look at all of the businesses. I have a case right here. They have 6 businesses.
Ooh.
And so we have to pull transcripts and investigate all of the businesses. Money moves around.
Yeah, yeah. Trying to keep your bookkeeping as clean as possible
Yeah.
and distinctively separated.
Mm-hmm.
Whole nother conversation. Whole nother
Commingling.
accounting, CPA, all that different conversation altogether. Different platforms to use for different things, and
Mm-hmm.
that's also something that we try to do as well, as make sure we have different softwares for different companies to keep them completely separate.
Right.
That's important, right? Really
Right.
important.
It is. You're not supposed to commingle.
Hmm.
You know, they have something called pierce the corporate veil too. So um, just separate your funds, separate them.
Hmm. So,
Personal, business, and if you have multiple businesses, be careful how you transfer money between the businesses.
One of the things that we were talking to another CPA about years ago is when you have one business and that's doing very, very well, and then you want to use one to sort of help boost another or create another or invest into another, the paperwork that you have to put in place of loans and liens and
Yes.
borrowing and all this other stuff to show that this company gets this money back after it's
Right.
gotten profitable and all this other
Right.
stuff. Woo, yeah. That's
Really, all it is a loan. Company A loaned Company B money. Company B needs to pay Company A back. And
exactly.
you got to put a contract in place. It needs to be signed and it needs to be abided by. And it needs to be on the books that one is a loan and one is a payable.
There
Did
you
I say that
go.
right? One is a loan and the other one has to pay the other one back. So it has to be traceable. Track
Yeah.
it. Follow the money. That's what the Internal Revenue Service is doing, following the money. And as I'm talking about following the money, to those of you that are listening, remember, the IRS has stepped its game up just like we step our game up on the outside. And where
Hmm.
I'm going with this is AI is telling on everyone. So
Hmm.
AI is helping the Internal Revenue Service find out and discover things a lot quicker. Okay,
Wow.
so just know, those of you that think that they can't follow the money, we can follow the money trail. When we do an audit and someone says, I never got the money, we can put a tracer on where'd the money go? What bank did it land at? Who deposited? Who withdrew the funds? The IRS can do the same thing. When you don't report a 1099 from Stripe or whoever,
Yeah.
the IRS has the access already. Okay. When you think, oh, they can Zelle funds to whoever, we can find out. And I'm
Wow.
gonna tell you the Zelle and Cash App, that's the one.
Cash out. I no.
When the IRS says that they're gonna pull bank statements, they're looking at every single transaction. How many times you go to McDonald's, how many times you go to In and Out, how many times you go to the high, however many times. And they're noting it and they're gonna question you about it. You said you
Mm.
don't have any money, but it shows that somebody is zelling you $1,300 every single month. Well, what's this $1,300 and who is this person? You said you didn't have a roommate.
Somebody's paying you rent.
Exactly. And what happens with rent? That's taxable income.
Wow. Wow. Do you know what? That's a whole nother conversation because the AI phenomenon that's going on right now with, everyone's using it for different things for, the chats and all these other different versions of the AI for whatever reason. Yeah. The corporations are using it too. Just like you just said, the IRS is
They
using it
are.
faster. How interesting is that to hear?
But here's another thing you guys need to be careful of. Some of you, you put your bank information into chat or whoever else. You reconcile your bank statement and you put 12 months in to this AI and then you give it to your tax professional and say, here, do my taxes. You've already released your information to the IRS without you already knowing. So
Dr.
But
White.
I tell people like, you put this in chat and you reconciled a whole year? You crazy.
Did
You
you just
crazy.
where your clapper at?
My clapper is right here. Y'all hear that? Look.
What
Stop
you
it.
say?
I'm just
That's
gonna say stop it.
crazy right there. Now,
Yes.
see, me myself, I'm always leery about putting too much of my information on anything that does,
No.
but people are doing that for real?
Yes. I got at least 5 people that literally came to me and said, I hope you don't mind, but I did this in chat. I put the whole year in. I was like, as long as it's right, as long as it's correct. So, but they do.
Ooh. And that, like you just said, that goes directly to the IRS. That is amazing to hear. I hear so much stuff all the time about what goes on behind the scene, but technology always just makes me say, because it's evolving daily. You know what I mean? It's like
Mhm.
ever evolving. But that's amazing to hear. Wow.
And it's not new. It's just that it's not new. The IRS has been using, analytical. We have humans that are analysts with the Internal Revenue Service, and they've been doing this for years.
Yeah, yeah,
So
yeah,
mhm.
yeah. It's just gotten a whole lot crisper and a whole
Yes,
lot faster and
yes,
all of that good stuff. Wow, wow. So with the corporate structure, you also coach other preparers, and I've seen you, girl. You when you get in that zone. Listen,
yes,
I see you in that zone. I said, "Ooh, she chiming in on it hard now, baby." So, because now you're talking to those preparers about the do's and don'ts of how to making sure that they are not hurting the client and making sure they know that they're getting their certs and getting those credentials that they need to represent the client well. Okay,
yeah.
ma'am, you hard on them.
Well, it's not that I'm hard on them. The IRS is hard on us, and then we need to be educated so that we can educate you.
Yeah,
And a lot of taxpayers are uneducated, and a taxpayer will throw any and every receipt at you, and we have to have some kind of pushback to say this is not allowed, and we
gotcha.
have to have we have to challenge them.
Yeah.
So it's called due diligence and it's called ethics. And so I make sure that everyone, the IRS says that we should be doing training every year on due diligence and
Mhm.
ethics.
Mhm.
Due diligence is making sure that we are asking the right questions. And we don't ask these questions, you all, just because we're held to a higher standard, and we can be penalized if we put
Yeah.
things on your return that we shouldn't. And I'm talking this business owners as well as our individual taxpayers.
Mhm.
But
Mhm.
yeah, due diligence is very, very, very
Yeah.
important, and the ethics is very much important. I mean, like, you guys are hiring us.
Yeah. 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 And that's why I love you so, because we see so eye to eye on that. I'm so big on compliance, so big on being staying within regulations. There's no gray areas on certain things. It's black and white on a whole lot of things when it comes to numbers and when it
Right.
comes to rules and when it comes to ethics. And you have those black and white areas that we have to stay within. So that's why I love so much what you do. I'm teasing you when I say all this, but I love what you're doing because
Hey,
it's so important. It's
it
so
is.
important. It's crazy that we even have to have the conversation of all this.
Well, some taxpayers don't mind taking a risk, and so I can't deal with those that love the risk because I know that there's repercussions that come along with it. And like I said, the IRS may be patient, but please, they're gonna catch up with you guys. They will. It may not be 1 year, it may not be 2 years. That
Mhm.
third year is coming. They're gonna catch you.
Mm. We don't need them kind of problems. We don't need
Mm-mm.
them.
If you get away, good. Then you get away, that's on you.
I know.
That's on you. But
No.
what happens in the dark comes to light.
Right, right. And that corporate piercing, like you said, whoo, Got to stay away from all of that if at all possible.
Yes.
So for the listeners out here, as we get ready to shorten things up, let me ask you this: what would be for a young lady that
Mm-hmm.
is just starting out, because I get this a lot with some of our 30-year-old ladies, maybe going to their 30s. Lady just starting out. She don't have a whole lot of deductions just yet, but she's a single mom. Maybe she's head of household, things of that nature, and she wants to put herself in a good position tax wise. Other than actually having multiple streams, what other areas can she actually sort of tighten up on? You know what I mean? And when you're looking at like a single person in front of you, if you had this person in front of you, you're looking at their taxes, and you're like, okay, I'm looking at analysis of what you have going on. There are some things I would recommend that you do to get yourself in a better taxable footprint. What would you say to that young lady?
Is this a 1099 or is this a W-2?
I would say a W-2 lady.
Okay. So the first thing I do when I see a W-2, I look at a certain box. I look at the withholdings to determine if they have withholdings coming out first, because there are some individuals who do not have withholdings coming out. I also look to see if the box is checked that says retirement plan. And if the retirement plan box is checked, that means that the employer offers a 401k plan. I then tell the young lady that I'll ask her if I don't see anything that's coming out, why isn't she taking advantage of the 401k? She may say, I can't afford it. And I'm going to tell her, yes, you can. Even if it's $20 a pay period, I need you to put that away for two reasons. It's going to reduce your taxable income, and it's also saving for retirement. The next one is if your company is matching, you're leaving money on the table. When you leave money on the table, that's having an impact on the back end when you go to retire. And or if you leave that job, you can still transfer from Vanguard or whoever, the Charles Schwab, Edward Jones, whoever your 401k plan is with, you can transfer that. Here's the other thing that I always tell people as well. Put a little bit of money into that 401k. Maybe you don't have that home right now. You may need to rely on this 401k when you go purchase that first home. Okay. There's a way that you can take a certain amount out and still not pay taxes on it if you're buying your first home. Okay. If you can show the Internal Revenue Service, then we can do that. That's for the person who has the 9 to 5. They get the W-2 every single year, and they find that I'm not getting ahead. I'm a single woman. I would also tell that single individual to make sure that whomever she's going to is getting all the credits for her, the head of household, child tax credit, all of those. 9 times out of 10, it's happening, but that's not always the case. Someone who's inexperienced as a tax professional could not check a button, and it may not calculate all the credits that this individual is entitled to. That's why, as a teacher, as an educator, I teach individuals to learn taxes, not to rely on a software system, because the software can do anything. You need to know the ins and outs of the law and where the numbers are flowing through to on a tax return. Because a box may not be checked and it can miss $2,000. That's why I hear, I went to Joe down the street, he got me 7,000, you only got me 5. Why? If she didn't check the box, she didn't know. But you need to know. So that's what I would tell the young lady. I would tell her to make sure that even on the outside, take some of her after taxes and put it into a IRA. Okay, after tax, not pre-tax. That's the money that you take home. See if you can set yourself up in IRA. Yeah. And I tell every young adult, every little $25 helps. I mean, from a person that was a single mom, it may seem like we don't have it, but if we find some way, even if we stretching our pennies already, see what we can do to take $10, $20 every single pay period. Don't touch it. Have the discipline, and it'll add up in the long run.
Yes, yes, yes. I love that. I love that. Because here's the thing with the people that we work with, big range of ages from 30s all the way to 90s. And so each chapter brings something different,
Yes.
right? And so as we get to the 50s and the 60s, now we're talking about how to protect their principals and their RA rollovers and their 401k rollovers and protecting the principal balance, all those things that we do for them. Along the way, we get these different questions on what should I be doing now in taxation? Da, da, da. I said, no, tax preparer. Hello, that's not my name.
One
But
thing,
one thing you do want to do is make sure that you're not just overly extending yourself. And that's why we have to make sure we bring these questions to the forefront.
right. One thing I don't do to say to taxpayers anymore, and hopefully those, maybe someone's in the mortgage industry and they're listening. I don't sell the dream of buying a home that it's going to save on taxes anymore. You know,
Mhm.
years ago, we used to say if you bought a home, you'd see the tax benefit. That's not necessarily the case to my homeowners now. Here's the reason why. In 2018, the Internal Revenue Service increased the standard deduction. And so the standard deduction now for a single person or even a married person, a married, I believe is 33,000 or something. Don't quote me.
Mhm.
But if you don't have mortgage interest, property taxes, and anything else that falls on our Schedule A that exceeds the standard deduction, it's not going to help you. Yes, we want home ownership. We do. But as far as seeing the savings for taxpayers, it's not always a benefit. So I don't, I,
Mhm.
I, I stopped, I stopped selling that. When people come to me and they say, well, my realtor told me I would be able to write this off on my return, you can write it off, but I'm letting you know you're not benefiting from it. You're going to benefit from taking the standard deduction versus itemizing.
Wow.
So just
Wow.
something to calculate and keep on the brain for those of you who are in
Yeah.
the home ownership mode right now, and
Yeah.
your person is saying buy a home is going to help you on your taxes. That's not always the case anymore.
Gotcha. Gotcha.
Mhm.
And that's where that playbook comes into place because rules change.
Yes.
And
Yes.
guidelines change from year to year to year. And if the person that you're working with is not staying on top of it, you understand what I'm saying?
Yeah.
If you're not staying on top of it, then the person that's taking the burden is you. So you have to do your due diligence to make sure that the person that you're working with is staying on top of what's recent.
Correct. Correct.
What's
And
recent.
the last thing I'm gonna say, I know we're at the top. Um, for my business owners, make sure when we talk about strategy, whoever you're going to, make sure they can do some tax strategies with you, because there are a lot of strategies that you can actually implement that's going to help you reduce your tax liability and put some money in your pocket. Okay, you got the Augusta rule, you got the medical, the 2%. You have a lot of different things that you can implement. And by the way, we talked about 401k. If I'm correct, if I'm correct, the first year you get that 401k, I believe they still have where it's a tax savings. Even if you got medical tax savings, just talk to your person. If they don't know, ask them to refer you to someone that can help you put some strategies in place and save you some money.
So
My
see,
self-employed individuals.
you just started talking about that Augusta rule, and you know we gotta go. Why you do that to me? So you already know. This is gonna be another conversation between us behind the scenes. Hello, but
It's a great one, you guys. Just DM me if you want to know about Augusta Rule. It's money in your pocket and it's saving the business owner seriously.
oh my goodness. So I'm excited that we get a chance to work together because I got some stuff for you.
Okay. Okay.
This is amazing. How do our audience reach you? Maybe get on your books, schedule some time, maybe see if some of your team members can assist. I know you got a big staff. What do we do to reach out to you?
Absolutely. So you guys can head over to, well, first of all, you can follow me on social media. I'm on all platforms as Dr. Cozette M. White. And then if you have tax matters, tax resolution matters, you can head over to I was about to say curious, Curative Tax Relief. Curative Tax Relief. You can go over to the contact page, schedule an appointment, schedule time. We'll have time to talk and figure out what's going on with your tax situation. Maybe you have some back tax requirements. Figure out what's going on, and get you back on track. That's the main thing. Like, get you on track, eliminate the headaches, going to bed, worried about if somebody gonna knock on your door. And I'm not gonna lie to you guys. The IRS does come and knock on your door. Yes, they do.
Don't close it out with the IRS on the door now.
But that's why you gotta come see me before we get to the IRS knocking on the door. Before they come knocking on the door.
We're gonna close it out with make sure you open them letters.
That's what we need to start with. Open the letters so they don't even get to the door. Okay, knocking at the door.
Yes, we don't want them knocking on the door, but definitely thank you so much for so much information.
You are
and
so
we will
welcome.
make sure that we put all of your data attached to this YouTube channel, so they'll be able to, if they go back and see replays, and we'll have multiple cuts and snips of these put together for you as well. So all of that will be in the working as well. So this is not the only part of it that you'll see. You'll see most of it divided over the next couple of weeks. So this is going to be amazing for people to be able to see that. So you'll have that information in just a moment. But guys, I want to say thank you so much for being here with us. I'm looking in the background here. And I see someone that says, "Ooh, open the mail, open the mail," she said.
Yes.
And there's another young lady that said, "Okay, I'm not going to the mailbox."
You might want to.
She said, "I'm not going to the mailbox." Hello, I absolutely love it. Absolutely love it. Listen, stay with us 1 second, Dr. White. Don't go anywhere. Don't go anywhere. Listen. Oh, guys, what an amazing finale with Dr. White. She said, make sure you go to the mailbox. Do not ignore that letter. Look at it. Reach out to your preparer. If they do not know how to negotiate it, or if they're not in a position licensed to really negotiate for you, reach out for a person that can do that for you, whether they have to have a power of attorney or possibly be your CPA or your actual attorney itself. Make sure that you have someone that is legally able and credentialed to basically negotiate for you with the IRS. And then she also gave some great tidbits on how to actually reduce your taxable imprint with some of those retirements, what type of retirements, and even if they had to negotiate for you, what type of plans is available based off of your circumstance. When I say she brought a lot of detail today, she brought so many nuggets for us to utilize. Please make sure you go back and like and share this particular video. There's somebody out there that needs to hear this information, that may be going through this right now as we see, and they don't even know what to do or who to call. But now they have a resource in Dr. Cozette White that they can reach out to and say, hey, I saw your show on Financially Fit Friday with Miss Curry, and I'm going through something similar. What do I do? Where do I start? Can I get you to help me on this particular situation right here? Utilize the resource, utilize the expertise. Make sure you reach out to Dr. Cozette's office and speak to her personally or someone on her staff to help you if you're currently going through something similar to this right here of the IRS in getting those letters, okay? And even if you're looking for someone to strategize your tax year next year, you and I just know from this conversation, preparing and strategy are two different things. Make sure you get yourself lined up with the right expertise to do the right thing for you and your finances. This has been season 2, guys. Oh my God. Of Financially Fit Fridays. I am Demetris Curry, your host and CEO of Inspired for Greatness. Debbie's Credit AV Talk, brought to you and sponsored by. We are so thankful that you were here. We'll see you guys again soon in the next season. Stay tuned.